Welcome back to Alpha Recap, your market cliff notes from stockalpha.ai. We recorded this after the close, so we'll walk through what actually happened today, not what might happen. As always, if you have questions, you can reach us at stockalpha.ai.
Today was one of those sessions where the headlines were loud, big moves in semiconductors, but underneath that noise, there were quieter, possibly more important stories. Let's dig in.
Right out of the gate, Semiconductor set the tone. The big name in AI chips finished the day down about 4.4% to roughly $178 on very heavy volume, about 218 million shares. That was the top headline for the session.
And while that company fell, a legacy chipmaker rallied, up about 3.4% to roughly $48.56 on about 148 million shares. So we saw intra-sector rotation. Growth-heavy names paused while value or legacy chip exposure got bought.
There was also a surge in an inverse semiconductor ETF. It moved up about 4.3% on extremely heavy volume, about 513 million shares. That pairing, the big chip name down and the inverse ETF up, looked like traders were hedging or rebalancing into downside exposure.
Exactly. When you get heavy volume in both the large cap chip and the inverse vehicle, that's consistent with institutional repositioning, not just retail momentum. Think block trades, hedge adjustments, maybe funds trimming AI exposure and buying protection.
For listeners who don't watch volume every day, heavy volume means more conviction behind a move. If a stock drops on light volume, it can be easier to call a pause. But a drop on heavier than normal volume suggests real selling pressure that could carry through, at least in the short term.
Which is why the report flagged short-term follow-through risk for AI and semiconductor-heavy portfolios. If you were overweight names exposed to that big AI chip company, you either saw your position come under pressure or you watched your funds hedge with inverse exposure.
But it wasn't all gloom. Underneath the chip stories, there were pockets of genuine operational growth. Usio reported a 19% increase in payment volume for 2025. That's the kind of metric investors can model into future revenue if margins hold.
Payments live and die by volume. A 19% uptick is material. Now the market will want to know whether that volume actually winds up on the top line. Will processing fees rise? Will margins improve? Will they sign more customers? Those rollout and margin numbers will be key at the next report.
And there was some industry-level activity that could drive more deal flow. BizBuySell teamed up with LoanBud to streamline SBA-eligible financing for businesses for sale. No terms were disclosed, but if that makes it easier for buyers to get loans, it could speed up smaller M&A transactions.
That matters because more financed deals means more transactions on marketplaces, more referrals for fintech lenders, and potentially higher take rates for platforms that enable those deals. Investors will watch metrics like approval rates, average loan size, and how many marketplace listings convert to financed deals.
Switching back to institutional activity, Horizon Kinetics reported a purchase of Texas Pacific land. Details were thin, but a buy from a noted value manager is a vote of confidence and could attract other funds' attention if the position shows up in filings.
Keep an eye on regulatory filings. If you see a 13F or a 13D down the road showing a meaningful position, that's when the market really starts to price in the conviction. For now, it's a signal, not yet a full story.
There was also private market noise. BV Investment Partners launched Altimeter Solutions Group and closed an acquisition to build a tech-enabled services platform. That's consistent with what private equity has been doing. Platform builds in software and services.
Those platform builds matter because they support long-term valuations for specialty software and outsourced services. When PE is consolidating the middle market, public companies in the same space can get re-rated or become acquisition targets themselves.
A couple of early-stage tech updates stood out too. Polar Light Technologies announced a technical milestone for an etch-free nano-LED approach that could enable RGB micro or nano-LED displays. It's a materials and process win, but commercial traction is the unanswered question.
Right. For long horizon tech investors, a single material etch-free method could lower complexity and cost for large display makers down the line. But until Polar Light signs OEMs or shows pilot results, it's a research milestone, not a revenue catalyst.
And in enterprise software and employee engagement, Rewardian integrated with Beekeeper to embed real-time recognition into frontline workflows. That's the kind of glue that can improve product stickiness for deskless workforce customers.
Exactly. Integrations like that can be underappreciated by the market initially, but they drive retention and cross-sell if adoption picks up. Investors should watch adoption metrics, not just press releases.
Let's do a quick synthesis of the themes we saw today. 1. Rotation within tech. Heavy selling in marquee AI and semiconductor names was offset by buying in legacy chip makers. 2. Flow-driven volatility. Outsized volume in multiple names suggested institutional flows were steering the tape. 3. Selective conviction. You still saw concentrated bets, like Usio's volume growth and the Texas Pacific land buy.
And add two more. Private market activity remains steady, with PE platform builds and strategic partnerships, and early-stage R&D is alive. Micro-LED and niche enterprise integrations show long-duration innovation continues even while traders rotate on shorter-term themes.
From a trading standpoint, the practical implications were pretty clear. Expect larger intraday ranges across semiconductor names and related ETFs. If you're a risk-managed trader, watch option volumes, implied volatility, and intraday support and resistance levels for continuation or reversal clues.
Right, and for fundamental investors, the checklist included, does Usio turn that 19% volume growth into higher revenue and margins? Does Horizon Kinetics file a disclosure showing a meaningful Texas Pacific land position? Do Biz Buy Sell and LoanBud report rollout metrics that prove the partnership scales?
Let's call out a few specific things to watch tomorrow. All of these were on the note. 1. Whether the big AI chip names saw follow-through selling after that large volume drop, or whether buyers stepped in for a bounce. 2. Whether the legacy chipmaker's strength was company-specific or a purely rotational trade.
Also, watch liquidity in that inverse semiconductor ETF. Heavy inflows into inverse exposure can fuel sharp intraday reversals, and you'll see that in spreads and ETF flows. For Usio, look for any updated commentary tying the volume growth to revenue guidance or margin improvement.
And keep an eye on filings related to Texas Pacific land. A Form 13F or 13D from Horizon Kinetics could be a real catalyst if it shows size. For the Biz Buy Sell partnership, any numbers on approval rates or average loan sizes will tell you whether that's a scalable revenue driver.
Finally, for the early stage items, pilots or commercialization timelines from Polar Light and customer adoption metrics from Rewardian will change the investment calculus for suppliers and potential acquirers.
Before we wrap, a quick rapid-fire recap of the smaller briefs. Invent Help announced a quick caution posts product that could affect industrial suppliers if it scales via licensing. BizBuySell teamed with LoanBud to build an SBA financing channel. Rewardian integrated with Beekeeper to boost frontline recognition. Polar Light reached a nano LED milestone. BV Investment Partners launched Altimeter after an acquisition.
All of those are important in aggregate. Individually, they're small. Together, they tell you market participants are still finding idiosyncratic, fundamental stories to invest in while traders rotate around headline names.
So, what are the takeaways? 1. Leadership felt unsettled today. Headline AI and semiconductor volatility dominated sentiment. 2. Beneath the noise, there were durable pockets of conviction. Payments volume, institutional buys, and private platform builds. 3. If you trade, be prepared for range-bound action and watch flows and options. If you invest, track the follow-up disclosures that turn operational wins into financial results.
And a practical tip: don't confuse noise for change in fundamentals. Heavy volume and hedge flows can create swings that look like a trend. Confirm with company-level data, guidance, filings, pilot metrics before changing long-term positions.
All right, that's our wrap for today. If you want the charts, bullet points, or the full brief we summarized, head to stockalpha.ai where we post our recaps.
If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back after tomorrow's close to walk through the next set of moves. Stay nimble out there.